Here is the tension this week. On one side, Coinbase and Circle have just entered the first 3-year renewal of their USDC collaboration, a deal that decides who earns what from the stablecoin's reserves. On the other, the Federal Reserve is about to publish its meeting minutes on Wednesday, August 19th, and oil prices are still feeding the inflation picture. Bitcoin is sitting almost exactly where it was, near $63,500, because neither bullish nor bearish traders want to commit before these events land. The USDC renewal is the quieter story, but arguably the more important one. The agreement governs revenue sharing between Circle, which issues the stablecoin, and Coinbase, which distributes it to millions of users. USDC currently has a circulating supply of about 71.8 billion, and the reserves backing those tokens earn interest. How that interest is split has a direct impact on Coinbase revenue. The fact that both firms have renewed for another 3 years suggests neither wants to walk away from stablecoin growth, even as regulation tightens. At the same time, the FOMC minutes, the Federal Open Market Committee's policy record, will reveal the debate inside the Fed earlier this month. Traders are not just reading for what happened, they are reading for whether officials leaned hawkish or dovish. Goldman Sachs already says a September rate increase is very unlikely, but minutes can still change expectations quickly. Add oil prices to this, because higher energy costs feed directly into headline inflation, and you can see why the macro backdrop feels so finely balanced. For investors, the practical impact is showing up as hesitation. Bitcoin's flat price around $63,500 is not a sign of calm, it is a sign of positioning. Stablecoin news can support sentiment by signaling confidence in dollar-backed crypto infrastructure, but it does not usually trigger a breakout on its own. The FOMC minutes can, especially if the language on inflation and oil is more nervous than the last statement. If the minutes sound hawkish, the dollar could strengthen and Bitcoin could slide quickly. If they sound dovish, risk assets could catch a bid. For Coinbase, the renewal removes one uncertainty from its revenue model, which is why traders should watch how Coinbase stock and the broader crypto equity complex respond once Wall Street opens later today. Looking ahead, the key moment is Wednesday afternoon UK time, when the FOMC minutes are released. The reaction will probably be less about the immediate headline and more about whether markets believe the Fed is more afraid of inflation or of slowing growth. Oil prices complicate this because they are set by supply fears and global demand, not by crypto, yet they shape the same interest rate expectations. If the minutes confirm that the Fed is on hold, the USDC renewal could add a slow, positive undertone for stablecoin adoption. But if oil keeps rising and the minutes reveal concern about pass-through inflation, expect the next move in Bitcoin and Ether to be driven by the dollar and bond yields, not by crypto-specific news. The takeaway for this week is simple. The USDC renewal is a structural positive for Coinbase and Circle, but it is the FOMC minutes and the oil inflation signal that will set the short-term direction. Do not confuse a quiet Monday near $63,500 with a quiet week. The real move begins when the Fed speaks.